Welcome back to the Dividend Diplomats YouTube channel, guys. You've got Bert and Lanny on this fine Sunday morning. Your coffee is flowing. That dividend is rolling into your portfolio as you're pursuing financial freedom, because that's what we're doing here on this channel. And today's video is going to be about a recap of the forced loss that I had to go through, but also what is next on the chopping block.
Smash that subscribe button. Everyone give this video a thumbs up. Holla at you boys. The Dividend Diplomats. It is time to check out the losers, get them out of our portfolio, and put them into the positions that we want to be in going forward as we relentlessly pursue financial freedom.
Yeah, Bert and I, we keep it real on this channel. We keep it transparent. We don't just talk about the wins. We don't just talk about great undervalued stocks to buy. If you haven't caught Saturday's video, we talk about the good, the bad, the ugly. Bert had some good news and some bad news in his stock portfolio, so check out Saturday's video. Again, it's all about the pursuit of financial freedom, building that passive income, building that dividend income stream. Sometimes it's getting rid of losers, whether that's you doing it yourself or it just happening on its own, guys. And if you recap from our last week video, my wife and I, in her portfolio, we owned quite a few shares of Walgreens Boots Alliance, and they have now been taken private to the tune of around $11.50 to $12 per share, plus a potential other piece to get of around $3 per share based on proceeds from another piece of their business. But regardless, though, it happened not on our own merit.
You know what I will say? That's kind of nice because the hardest thing sometimes I think for investors is when you have a loser to figure out how to sell it. Because you're always dealing with the emotional of, do I want to actually hit the sell button, realize the loss, and then miss out on the pop that could inevitably come right after? That's always something that's in the back of your head. So it's nice when management takes that decision out of your hands sometimes. When a company like Walgreens gets acquired, taken private, that there's a finite ending to that stock. So in this situation, you didn't have to deal with that emotion. It just got taken out.
Didn't have to deal with the emotion. So we were left with almost a $4,300 capital loss. We did get about $1,426 in proceeds. At first I was going to split that into 3 ETFs, but I decided just to keep it 2. We keep it pretty bare and basic with my wife's portfolio. So we actually split it between SCHD and VYM, $713 each. Obviously $712.90, but rounding up. Bert, we added $44.50 of some consistent, reliable, growing dividend income.
Beautiful. You're taking out a loser and putting it into 2 funds that average in the 3s for dividend income percent. Fantastic. Building up another portfolio. 1 ticker down. But wait, that wasn't the only benefit you got here, was it?
Not the only benefit. Obviously, from a tax standpoint, we'll more than likely take the $3,000 capital loss this year in 25, maybe save around $720 in taxes. And then we'll more than likely be able to roll, again, based on other activity, probably we'll be rolling some long-term capital losses into next year. And in this case, we'd have another $310 benefit going into next year, guys. So, if you actually take in the tax savings plus the proceeds, it's, all the tax benefits, we're probably closer to $2,400-$2,500 in net pure benefit.
Which they're real dollars. So that does matter. It
matters.
I mean, you're still missing out on obviously the portion that you don't get the tax benefit for, but at least it's something. So you have that plus the dividend income that's added. So that's beautiful.
Yeah. And it's one less stock, guys. There's a huge benefit. Plus the passive income is going to grow by itself, being based on historical matters, but based on, being within VYM and SCHD.
Love it. So are you stopping there, Lanny? Is Walgreens the last one that you're slowing down?
And then kind of to touch on another video that we did, we have to turn our page to what's in my portfolio with Paramount, Skydance, ticker symbol P, Sky, PSKY. And Bert, I'm closing in on almost 193, 194 shares of P Sky.
Yeah.
Sitting on over a $3,000 long-term capital loss.
Mm-hmm.
So I own about $2,850. And, was successful in doing another option on them. If you guys recall, I did a pretty nice one at about $18 a few weeks ago that expired worthless. I just did another one for a little bit over $6 to $7 at an 18 strike price that expires this upcoming Friday, September 12th, I believe. And so Britt, this is kind of where I'm at right now with P-Sky.
I mean, the acquisition price at the close of that last one was about $15 a share. So you're basically building in $3 of appreciation in your options from where they were just acquired and the value that was closed for the company. And right now it's hanging around 14.74 a share, right around that acquisition price. So yeah, a $3 climb over 20% jump. That's yeah.
I'd have my arms wide open to
That's,
see if they get to $18.
that's how I feel with Intel. I keep writing Intel covered calls that are somewhere above $30. I'm like, please,
Please
take these.
Yep. So, and I was looking back at it because I've actually written a couple other options on Paramount earlier this year. I've actually generated $26.39 in option income this year, which is actually added almost, based on the current market value, almost another percent to the yield of Paramount. Paramount does pay me about $38.66 because they pay, I think it's 5 cents per share per quarter right now. Yay. Or 1.35%. So I've already turned that 1.35% into an over 2% stock based on the option income.
Well, that's the beauty of the option strategy is you can earn more income on your position.
Now, again, this is the next one that's probably going to go from the portfolio because I'm writing these covered calls, much closer to where they're currently trading at. Bert says he's writing some on Intel that are well over like $30, $35. Intel's trading probably somewhere between 23 and 25. So that's, when you think about it, that's far higher than, they need a much bigger trajectory to get to those, options to be in the money. Whereas, I'm looking at, probably somewhere in that solid 20%, but even less. Because when I actually wrote the $18 covered call, they were actually closer to $16 per share. So
that's fair. I didn't factor the price dropping thereafter. So yeah.
Yeah, it dropped bad today, but I was actually only about 10%, a little over 10% away.
All right, so let's take a hypothetical sale here. You have right now the market value is about 28.50. What would be your plan for how you want to reinvest it?
Bert, you guys in the community know I'm going to keep it simple. We're going to split that right down the middle with the 4 ETFs that are blowing my portfolio to new heights, and that is VYM, VOO, VIG, and SCHD. I would split them all equal. I would generate about $65 in future dividend income, which is a net add of about $26 in forward income in addition to what I'm getting from Paramount. Again, I think it's fun generating the option income, but what's not fun is seeing the red day in, day out, seeing it claw back a little bit, go down a little bit. Again, we were in the 16s per share not too long ago, a day or two ago. And seeing it back into the 14s, when you do the math, it's another 10% value loss. So it's not fun seeing that.
Yeah, your capital loss is 3,100. You divide that by $6 to see how many options you have of $6 you would need to write to make that back, Lanny. That's about $530. 530 options at $6 premiums, right?
10 years later of me writing 1 week options
yes.
to get $6 each a week.
Yeah, so I think that's very
not even considering taxes, but
yeah.
So guys, that's right. Go ahead, Bert.
No, I just say whatever. I mean, it's neither here or there.
So yeah, the goal here is writing covered calls closer to where they're trading at, generating that premium income. Sometimes I do have to go out to 2 weeks. Like this one I wrote, I don't know if it was a day ago or if it was on Tuesday, but I had to go out to the next Friday because of the short week of Labor Day. So I'm doing, I'd love to do 1 weekers, and if it goes, it goes. But it gives me a chance to repeat maybe. But this one, at least, I probably won't go longer than 2 weeks because I want to keep churning out the option premiums for right now. But that's the goal, and that's kind of what I would do with the proceeds at current market value as of September 4th.
Yeah. All right, everyone, let us know. What do you think of Lanny's plan for Paramount Sky? What do you think about the big Walgreens move that he made? A lot of love shown being thrown to the ETFs, a lot of future tax savings as well. Let us know what your thoughts are about all of this in that comment section below.
Exactly, guys. Like the video, subscribe to this channel, and remember one thing: you guys are either with us or you're against us, Jack That was Bert the Hurt and Lanning from the Dividend Diplomats over and